get that fully immersive audio. Welcome in. Thanks for joining.
Hi guys.
How are you doing? Can you hear us okay?
Yep, all good. I can hear you guys.
Amazing.
Awesome.
Well, we're super excited to have you on today. Thank you so much for joining us. Yeah, we know there's a lot of super exciting things going on the AFI side, but maybe let's just start off with an introduction, your background, what you guys are building.
Yeah, sure. So, I started off primarily as an ethical hacker. This was back during my IIT days when I was pursuing my, dual degree in mathematics and computing. From there, I dropped out to start building one of the, leading risk management companies in DeFi. We built Chain Risk, where we served Compound for almost a year and a bunch of other protocols across the entire DeFi sector. Then we came up with this very interesting problem statement, which was specifically tailored to proof of reserves. Right. So if we are seeing the entire landscape at this point of time, then we would see another $100 to $200 trillion of real world asset that would come to be tokenized to find yield in DeFi. Right. And whenever this gets, integrated across DeFi, you would need to convince two people. One would be the risk managers who are going to list these assets across different markets, right? Or the curators across markets like Morpho. And the second would be really the Oracle providers. These guys would be the people who would be powering the price feeds. Now, both of these people essentially need a data source to independently verify that there have been enough reserves that is backing a given asset at any given point of time. So that's what we started off with. We have built out a cryptographic proof of reserve network where we generate multiple cryptographic proofs for the reserves. And then we go one step further, for which we are working with Monad at this point of time, is something called proof of reserve vaults. Right. And what proof of reserve vaults do is they go to the 4626 level and integrate the minting limits or reserves within the vault itself, which means that a collapse like XUSD cannot happen anymore because now the 4626 is reserve compliant. So that's basically us. And happy to delve into what we are doing exactly with Monad right now.
Yeah, let's do it. Why leave the viewers on the edge of their seat? Tell us a little bit about the stablecoin vault and what's going on with Monad specifically.
Yeah, sure. So I think why we primarily chose Monad is a lot of really strong protocols are actually coming here with real value. Unlike a bunch of other chains that we have alternatives to go to. So that's why we chose Monad. The second is there's a real value that the Monad ecosystem team has been giving us and pushing us for doing things in the RWA space, right? And I think very few chains are actually focusing on that side of things. So that's where we launched our, flagship proof of reserve vault along with Multipli, where we have deployed a $50 million stablecoin vault in association with them. This is largely backed by a series of reserves, it is backed by gold, it is backed by real estate, it is backed by some of the largest family offices in the UAE. It is also backed by some of the largest mines in the Latin America, right? So that's kind of the composition of underlying assets against which a stablecoin has been issued. Now, the next step for us is to go ahead and integrate this stablecoin across multiple markets like Morpho, Curvins, so on and so forth, so as to give these institutions anywhere between 5 to 7% healthy yield. But here's the new story that we are also coming up with a couple of retail vaults with, again, some of the largest players in the market, largest stablecoin issuers in the market, where anybody can basically come in and deploy into these vaults as a part of the AFI cross Monad ecosystem. And then they can get a share of that yield as well.
Super exciting. And you talked about the different types of RWAs and the different types of providers that you're working with, everyone from stablecoin issuers to hopefully it sounds like even more exotic or longer tail assets. What are the RWAs that you've been most excited to work with so far? And where do you think the future of RWAs are? What types of assets do you think you guys will end up supporting in the future that might not be here right now?
So our goal as a company is to basically bring in maximum of those assets which were illiquid, right? So, if you think about largely the tokenized gold market at this point of time, then that is still very, very liquid, right? So if you think about XAUT by Tether or Paxos Gold, right? Then those assets are essentially liquidatable, which means that if you are essentially minting somewhat of a stablecoin against it, then it's instantaneously integrable into DeFi, right? So what happens is, you have a bunch of these baskets of not so liquid assets, which would essentially need to get integrated into DeFi. And the way to do it is you first tokenize these assets. So think of a mine, right? Somewhere sitting in some part of the world, right? And you tokenize it, but how do you make it liquid, right? And this is like very, very exotic asset. So I think we are going to go step by step. We are going to choose more liquid assets first, where the more the liquid the asset is, the more we can actually show more growth on the side of the protocol, on the side of the chain, because that's where people are able to actually get the yield. But the real problem, or the large visionary problem to solve over here is, there's a bunch of like idle asset across the world. For example, think of a mine, right? So let's say a mine in Latin America. They, for example, want to get their working capital. Right. So what's the method at this point of time? You have to sign a bunch of documentations with, let's say, JP Morgan, get your deal signed and have some interest rate that you need to pay to them. And that acts as your working capital. But what if, you can tokenize that mine and you get anywhere between 6 to 7% via DeFi, and that essentially fulfills your working capital requirement. And that would be the real game changer in the market at the end of the day. But what needs to be protected is a layer of fabrication which will actually build this, which is actually proof of reserve as an infrastructure.
Yeah, and you guys are, so for example, in the Monad Vault, you guys are working with Multipli on that. How did that relationship come about? Obviously the value prop here makes a ton of sense. How did you guys bring that forward with them, and how have the partnerships with RWA asset issuers, how did that begin?
Yeah, sure. So I think this process actually began somewhere around 5 months back. This is dating back to the October 25 crash in DeFi that we saw across multiple protocols, right? So there was Elixir, there was the XUSD stream financing happening, and then so Sharan, the CEO of Multipli, has been a really good mentor of mine, and we were kind of that day we were sitting together and we were thinking of what really happened, because like some billions of dollars got wiped out of DeFi on a single day, right? And that's where we came across this great problem statement that, in case of something like a stream finance or something like an yield bearing vault, you can still probably have a verification proof at the back, right? Because most of the capital is on chain. And for capital which is off chain, you already have for strategies that are running on, let's say, centralized exchanges, you can basically give like attestation reports. But now think of something where the assets are not only off chain, but they are also offline. And when you go to integrate these assets into DeFi, this becomes the next, sort of eureka moment for the world, where, if at any point of time, you as a user invested your capital into this stablecoin, which you suddenly get to know isn't backed by anything, you are screwed. Right? And then something like that could happen where, if this stablecoin is, let's say, now listed on Morpho. So this stablecoin got depegged because this doesn't have any reserves. But against that stablecoin, which right now the oracles are not reflecting, I can go ahead and borrow some liquidity from Morpho, which would then lead Morpho into a bad debt because my collateral asset is not backed, right? And Morpho doesn't realize this in real time. And that's why proof of reserve is the main thing that we focused on. And from there, we worked with Multipli on multiple things. And we are also coming up with a bunch of other vaults with Multipli. Some of them are going to be on Monad as well. So yeah, super excited for that. The Monad team has been super supportive, Gmonad.
Love to hear it, Gmonad for sure. Curious, as someone who's kind of building in the RWA space day in and day out, where do you think we are in terms of like the ultimate end state of there's just a ton of RWAs actually on chain? What inning are we in? How does this play out over the next couple years? Who are ultimately the biggest players in the space? And how does that affect the overall chain landscape? Which chains are best positioned to capture this growth and activity?
I think, so one of the problems that has natively been with a lot of DeFi protocols or, a bunch of yield bearing assets is that most of them have been highly airdrop and incentive driven. Now, this was a moment. So, so we come from that cypherpunk age in crypto, right? Where a bunch of things used to happen just native DeFi. We were on anons. We did not give like anything about any of the like KYC, KYB. But now, we are entering into a world where, suddenly large institutions have started gathering crypto, right? And this is, I think, a pivotal shift because these institutions do not want 10% of your airdrop. They want real yield, right? Coming from like a legitimate lending activity, right? So let's say one of the biggest things that is becoming big right now is RWA-backed lending, right? I think some of the largest protocols in the market are built around this thing at this point of time. For example, people like Centrifuge, right? They are like doing a phenomenal job at this, where they are giving real world yield back to the investors. And the underlying is crypto. So these investors, they don't even know that the underlying technology is blockchain, and they're doing all of that thing on this, right? A common shopkeeper who would need like lending against his like balance sheets, he doesn't need to know that all of this is on crypto. He just needs to know that, I am getting paid against my invoices, which I need to give back at a given point of time, right? And this is the interesting era that we are sitting on right now. So we are like, at least from like the DeFi side of stuff, we are pretty early, right? So if you see on DeFi Llama right now, approximately $22 billion of tokenized real world assets are there right now, out of which, about 1% is in DeFi roughly, right? Which is like very less. Now that's where we fit in, right? So we are essentially the bridge between somewhere like a TradFi world and the DeFi world, where there would be a bunch of assets which are going to be tokenized, but for what purpose? You would essentially want yield. And the best way to get permissionless yield in the market is proven to be DeFi. Now, I know there could be like a lot of arguments around how much amount of yield have all of people made across DeFi, but I think one of the major things would be which ecosystem focuses on it the earliest. So I think Monad is best positioned from that perspective to be one of the early movers in this space. And that's why we have chosen Monad as well. I think, we've got phenomenal support from the entire team till date. And I think the way ahead is, there would be some 3-4 top chains in the market who would be handling all the RWA, TVL across the world. And I think Monad would be leading that charge.
Yeah, appreciate that, and I think the vision resonates across a lot of different areas. I think like I first started hearing the proof of reserve conversation post that 2022 rehypothecation. Obviously, everything going on with like Celsius, 3 Arrows, FTX, etc. And now it seems like RWAs are so relevant from the perspective that stablecoin issuance keeps going up and to the right, and we need more sources of yield that are just beyond traditional line and borrow from crypto users. And as you mentioned, there's this huge gap between kind of these like vaults that TradFi institutions are creating, but then there's no actual way to access that. I guess in, kind of to Danny's part of his question there is like, maybe we are in like inning 2 or 3 right now. What does inning 9 look like? How much, bigger does the TAM on RWAs get in crypto?
I think that's where most of the wealthiest of the world people are sitting on. That is the RWAs. So I think from that perspective, we can just imagine the number of, largely the number on which the entire world is sitting on in terms of capital. So if you think about the entire world, the world is sitting on $100 trillion of real estate itself, right? And then a bunch of other assets that are backing all of this. So if you think about like the largest of the largest people in the world to people in India, right? So like if I talk about India, India is one of the largest commercial gold holders, right? So gold ornaments in marriages across India is one of the things, right? So we are the people our parents hoard gold, right? And that is sitting in some of our Indian bank in some vault lying idle. And if we just go to our parents and say that, hey, we have an innovative way to basically, not so that you do not lose the custody of your gold, but you can go ahead and get 6 to 7% of interest on that so that you can pay off a lot of loans, which you usually pay off from your salaries, right? So that's the world where we are headed to. Now, if you think about size, I think like 10 years from now, we are speaking of anywhere between a 50 to $100 trillion size. But at present to where we see at 2030, we would be sitting at around $10 trillion of assets, which is being tokenized. But what really matters is to actually make this effective in DeFi, because if you're not able to make this effective in DeFi, it really doesn't make sense. I mean, in case of real estate, you have like rental yield, which is like a real world yield again, which you can get on your tokenized real world asset, right? But in case of most of the tokenized asset, there is no yield that you're getting on top of it. So DeFi has to be the like first way or the native way to get yield on that capital. And we are seeing that happening or starting off, like it started off like 2 years back as the BlackRock Biddle move across the world and the T-bill move across the world that America has been doing from a long time. And now this is going way ahead. So T-bills are not just the thing people are focusing into. They are actually expanding across multiple things.
Interesting. This is super cool perspective as someone who's kind of focused on this day in and day out. So I'm sure the listeners are enjoying as much as I am, or the viewers, I should say. Yeah, I mean, this is definitely something we'll have to run back. As we get further into 2026 and we see more and more of this materializing and progressing, and certainly, excited about the concerted effort from the Monad side here at the foundation. Certainly a lot of thought being put into both DeFi and the RWA space and beyond, of course, but these are definitely some promising areas. We recently had Joanita Titan join the team as the director of institutional growth. And so this is an area that she's focused on very, very acutely. And we'll have to bring her on the show as well sometime soon to talk about that vertical in more detail. But at the end of the day, there's a lot of excitement for RWAs and activating this asset class in DeFi. And I certainly agree. It seems we're at the very early stages of this actually playing out. So would love to revisit this in a month or two as we see more and more continued progress. But this $50 million stablecoin vault is already live on Monad, if I'm correct.
Yeah, that is absolutely live. And we have a couple of other vaults going live by the next 4 weeks to 8 weeks. So I would say the entire community to stay tuned for that, because I think that would essentially drive a lot of retail capital. So yeah, I mean, I'm excited about it. As we say, it is for the first time that Y Combinator has given an RFP for the first time ever for stablecoins and RWAs. Now, it shows that the global world is recognizing for the first time that DeFi can actually be one of the largest things in the world. But at the same time, while everybody else is speaking about RWAs, and this is the meta and the narratives in the market, this also makes it very, very crucial for teams like us, because it's a narrative, which means that probably a bunch of things in this field would come along, but it also makes it more difficult for us, because we would be held more accountable against anything that we are doing in the market. And at the end of the day, it's people's money. We started from I started my life from ethical hacking to risk management across DeFi, and now handling one of the most vital things, which is proof of reserve for real world assets. I can tell from that perspective that we really need to focus on consumers. We really need to focus on product. We really need to focus on revenue. And at the same time, we need to focus on doing all the other stuff that we keep on doing across the entire industry. So it's for the first time, I think Monad has been one of the greatest motivators. The team has been greatly motivating. Parin especially has been greatly motivating to us in terms of telling us, go and get the PMF in the market. And we are headed towards that. So happy to do it with Monad.
100%. And the PMF is here, and it continues to grow. You can find on AFI protocols at XYZ. Users should go on there, check out the $50 million stablecoin vault on Monad. But then also congratulations on already verifying $1.2 billion worth of assets and a TVL of over $200 million already. Congrats on all the growth and success, and we're really excited to continue working together, and we'll have to run it back again soon. Thank you so much for coming on.
G Monad.
G Monad.
Awesome. That was a super cool perspective. The RWA space is definitely one that doesn't get a ton of conversation on CT, but it is quite exciting at the end of the day. This is where a lot of the, I think, future capital in crypto, in DeFi is going to come from. And in a sense, it's kind of similar to, why is Monad good for payments? Well, it's just a better, more efficient infrastructure layer that these things can be built on. And